Fire warden here, about to run a fire drill. Just kidding. Fire drills are important, and we do them because we want to stay calm, have a plan, stay safe in the event of a panicked situation. So they don't happen all that often, but they do. So we want to make sure we have a plan of action for when that does happen. So how and why am I talking about fire drills? Mike, walk us through why we might need to run a periodic fire drill or be prepared for a fire drill in the financial market.
That's a good question. We've had a really strong period of equity returns since the beginning of 2023. Stocks are up almost 100%. So you doubled your money over the last 3 years. That's great, but people have become complacent. And so it's important to have a reminder that, hey, there's going to be a fire, so to speak, at some point. It's not a question of if, but when. What do we do when that occurs?
22 doesn't seem all that long ago, but we were down quite a bit in 22, 20. It goes back. So history is fraught with examples of, it not always being sunshine and rainbows in the financial markets.
Yeah. And, what we're looking at here is a graphic from Dimensional. And I think this is a really important set of data points because this tells us how frequently things like market pullbacks, 10% decline, bear market, 20% decline, or even a 30% decline occur. It's more often than people would think. Okay. So obviously, if you were to total these numbers up, they don't equal 100%. All declines of 30% or more or 20% or more are also going to be included in 10% or more. So just in case the numbers weren't making sense, that is important to understand. But a 10% decline or more, this is a market correction. This happens on average 57% of the time. And in fact, the average intra-year decline for stocks is north of 14.5%. That is the baseline. That means 50% of the time we're going to see a decline of more than 10%, 30% of years. And this data is important to point out. It goes back from 1927 through 2024. So about 100 years. A bear market, 20% or decline or more, 30% of those years. So 3 out of 10 years, we're going to be experiencing a bear market on average historically. And then the big ones, 2008 tech bubble, those types of situations where we've got stocks declining by more than 30%, it's 10% of the time. That's 1 in every 10 years. So this, I think, is important to highlight that, these happen. They happen more regularly than people would like to think that they do. So we got to be prepared.
Yep. So we have a fire. It's coming. What do we do when it happens?
The two important things to focus on when we talk about what to do, when we have a fire, so to speak, or a market correction. One is we got to be prepared emotionally. We need to understand that this is the way that markets work. All right. We have to be able to stomach it. In fact, one of my favorite quotes was from Peter Lynch. He managed the Magellan Fund at Fidelity for many years, had a lot of success. And he said, the most important organ for stock market investing isn't the brain, it's the stomach. And what he meant is that we have to be able to endure. It's not, whether or not these ups and downs are going to come. They're going to happen. We just got to be prepared. The second thing is that financially, we've got to align our investments with our time horizon. The average bear market duration is about 18 months. Okay. If you need to sell stocks in your short term, over allocated to stocks, you could find yourself in a difficult spot because if you have to sell them when they're down, you don't participate in the subsequent recovery. So, having a cushion between, good times and bad, making sure that you've got emergency funds saved. If you're in retirement and you're in withdrawal mode, you've got other assets that are not in the stock market to diversify your portfolio. We utilize what's called a safe account, which basically if we're at a withdrawal rate above 5% per year, meaning we're taking more than 5% of the portfolio out to fund spending goals, we'll set aside additional funds in something very conservative, very safe.
Fire retardant funds.
We could consider it. We'd have to get into this explanation, otherwise people might think we're crazy.
One of our favorite types of clients, and we have one that literally texts me every time this happens, when the market is down or we're in a fire drill situation. 22 was the last time we did this. I always get a text from him saying, what are we buying versus, oh my God, sky is falling. So just keep your head about you, have a plan, stay methodical, stay logical, but it's going to happen. The markets will drop, they will come back. Just know what you're going to do. And when that happens, make sure you're properly prepared for the time horizon, your needs for that year.
It's important to point out, we're recording this at a point markets are at highs.
Yes, all time.
That's why we're running a fire drill now. So
yeah, stay with it, stay invested. Reinvest if you can. Pay attention to your time horizons. Talk to us. Stay safe.